Good morning, it's Harvey Jackson. Just going to get through some of the news items. Iran's still shipping, and the Trump trade, of course. Let's just get into it here. Iran's exports could keep flowing even as Cargo Island is disrupted. And in this, it's very brief here, but it just says that a lot of the stuff is still shipping, and there's evidence right on the Marine Tracker. So if you guys wanted to follow Marine Tracker, just put in Marine Tracker into your Google search, and then you can move across almost anywhere and have a look at some of the shipping routes. And I put it on satellite mode, so you can just see. But you can see these boats pass very close to Iran, and I think that's the passageway that a lot of these guys are taking anyway, or have to take. But you can see there's quite a number of boats that are moving there. This was, to maybe start off the Trump trade a little wee bit here.
In the oil markets and the suspicion that some people are getting very rich by trading on inside information. In the minutes before President Trump's announcement Monday that the U.S. would postpone strikes against Iranian energy targets, traders suddenly bet hundreds of millions of dollars on oil prices falling, which is exactly what they did. To help us understand, Jill Schlesinger is here, CBS News business analyst. Jill, why does this stand out and why should people care?
Well, I think the most important thing and what stands out is that we saw a surge of trading activity. So if you look at this at 649 to 651, there's this circle there. Yeah. That's a big jump up in activity. And then soon after, we see the price of oil at the top, and then it drops by 10%, literally in minutes. 15 minutes before this non-public information is out.
So somebody might have known something a little too early.
It does appear that way. And why we care about this is that is not considered public information, and someone seems to know it. And that's illegal, Tony. I mean, that's the issue, is that this is essentially insider trading.
So is it policed? What do we do about it?
The thing about insider trading is we've known about it forever. We have so many different ways to do it. It's usually triggered by this kind of trading activity, and we get an investigation. But right now, I don't think we're going to get a big investigation. The Trump administration says light on regulation, and there's not a lot of funding for folks at any of these regulatory bodies. So I think for the people at home, it kind of feels like it's not a level playing field because this looks like it is not.
All right, Joe. Thank you very much.
So there you have it. And Susan Stroud actually talks about every time Trump speaks about soybeans, the market reacts here. So you can see the arrows that she's put on here. Every time there's a market movement here, it makes the market move, which is kind of cool. White House says Trump will meet Xi in May. So that's actually helping the market there as well. Soybean spreads at the mercy of China. So opposite to that, but the market is trading China with being the largest buyer of soybeans on the planet, that they are going to take some. And meetings do kind of telegraph that they are going to buy some as well. Crusher economics here. So this was interesting. The Bunge Global, their share price is going up along with the oil price. They are one of the largest crushing companies on the planet. Iran war may push 45 million people into acute hunger by June, if this and that might happen regardless whether they kind of get things flowing. There's still the issue of shipping costs, and I'll get into that here right here as well. Ship owners fear fuel shortages if Iran war continues. They're still allowing some marine traffic, but it's limited to people that they're shipping to only. So bunker fuel is the major cost driver for global freight. When bunker fuel spikes, container and bulk freight rises, which impacts fertilizer, lifts export basis levels for grains and oilseeds, and tightens global supplies, often boosting commodity volatility. So it could raise the prices of the grains, but there's going to be some pressure on that as well because all of our costs are going up as well. Corn Belt storms are expected to maybe add some moisture there, but the issue with the heat that's coming is there's some fire possibilities there as well. El Nino looks very likely this year, so areas that favor or take away moisture, you're gonna have the El Nino effect possibly. So snowfall and rain going across here. Yesterday I talked about there's some dryness, and I was going to maybe highlight the soil moisture. There is no real big problems for soil moisture as of right now, anyway. Quick look at the markets. Canola is up 270 on the front month at 729.90, so just shy of 730. The November contract is 736.20, up $2.10. Soybean oil is up 63 points at 67.73 cents per pound. Palm oil is up. Crude oil is up as well at 93. Brent is up at 106, and your diesel fuel is up 20 cents at $4.21. Soybeans only up 2/3 of a penny. Your spring wheat is up just 1/2 cent, and everything else is basically just unchanged on wheats. Corn is flat as well at 4.67, and the Canadian dollar is down again. Let's just get into it here. So what I did here is just show percent rise since the beginning of the year, January 1st, and you can see that the soybean oil has gone up 38%, and we've gone up 18%. So we've we're just half of the market move in soybean oil versus the soybean oil is up 38%. Canola is only up 19%. And you can see this is the November contract, still on its uptrend from January 1st. So we basically come up from 630 all the way up to 730. So $100 a ton since January 1st, kind of thing. Your European rapeseed is just it's on this little bit of a wedge going down here. But soybean oil here, you're well supported. Your soybeans, not that same kind of support, but it looks like it's trying to get through that level of support that got created as maybe overhead resistance here as well. Your crude palm oil, almost the same kind of chart as your soybeans. Here's your crude oil, just trading sideways here. And your diesel fuel futures had its high, but still kind of holding up there. Volatility index, and the only reason I'm showing this is because it is fairly high. So you got the volatility on the S&P, and you've got the Trump tweets that are increasing the volatility on the S&P for sure. And the market's been up and down. So here's the Canadian dollar. We're at the 200-day moving average, and we're below it right at the moment. We'll have to see how it closes here. But you can basically say that we're in some sort of wedge here as well. It looks like downward movement, and we've this pivot extension line right there. We're definitely below that as well. Your U.S. dollar, it still looks like it came off of the highs, last week, but it's still positive here as we speak. Gold futures been falling off. Quick look at wheat, trading sideways, but are at the top end of this kind of channel here right at the moment. And Kansas still trading at the top end of that channel, but still upward movement there as well. Chicago, this trend line probably needs to be shifted if we can kind of hold here or move back up in this direction. Quick look at the proteins here. You basically look like you're caught in a wedge of this pivot extension line and your 200-day moving average. So you look like you're getting squeezed. We'll have to figure out which direction. I'm feeling it as food inflation for every other product is high. It's very likely to go in that direction. Just looking at the charts. Same thing with feeder cattle. That's all I have for you today.